Brian, just to bring you in, it'd be great to hear a little bit more about your background. And I know you're in Kenya very regularly and have business across East Africa. So perhaps you could introduce yourself and how you work with private clients in the region.
Yeah, sure. So yeah, I'm the CEO of Equiti Brokerage. Equiti is a global brokerage. We're based in the US, Latin America, across Europe, very big in the Middle East. Lots of places, New Zealand, Armenia, etc. And we were you guys in Kenya particularly will know us as EGM Securities, and the byproduct of that is FX Pesa. We were the first regulated brokerage in East Africa. We worked 4 years ago, worked for a couple of years, and were awarded the first license 4 years ago. So we've got hundreds of thousands of Kenyan private clients. We've got approaching millions of clients across the world. And we offer them access to global trading markets. That's what we do. We've opened up global access to markets for Africans. So yeah, I've been doing this for many, many years, 15 years plus, in working in multiple different jurisdictions. I've been fortunate to work with institutions, the biggest banks in the world, brokerages, and private clients. And I'd say probably my passion is to have these kind of conversations with anyone and everyone about wealth. So thank you for having me.
Okay, fantastic. So we're trying to make this session interactive. So we've got some poll questions which we're going to just pop up on your screen now. The first one is just really gauging with the audience about your experience in alternative investments, whether you're owning any at the moment. I think if I press launch, that will. You should have received something there, I think, on your screen, or you can go to your poll tab to fill that answer in. All those polls are live now. So perhaps if the audience wants to go ahead and complete those polls, we can discuss them, discuss the results in a moment. But just to come back to our speakers, I mean, why is it that you think that private clients today are looking outside of the traditional investments into international equities, bonds? Obviously, cash is yielding nothing. But perhaps, Brian, I'll come to you first, as we're hosting this on alternatives because people are looking outside of perhaps their core trading business or savings and investments into different asset classes. What do you see from this field?
Well, it's great that we're having this conversation because, and so they should, right? They should be looking for alternative investments as well. When I first came to Kenya 3.5, 4 years ago, the thing that was very apparent to me is that people were very actively interested in investment. A lot of people are addicted to their mobile phones. I think in the UK, the average person is on their phones between 6 and 7 hours a day. In Kenya, it's more like 8 to 9 hours a day. Kenyans are surgically attached to their mobile phones. And we know that it is a huge and growing market of people that are interested in this. Africa in itself is the fastest growing digital consumer market. There's going to be 690 million smartphone users by 2025. So I saw this obviously massive interest and massive opportunity, but when I actually dug into what people trade, it was local equities plus bonds and real estate. Local equities, bonds and real estate. And at that time, obviously then, going into coronavirus days, we saw how impacted the African stock markets were. I think Anne touched on her keynote speech around how illiquid real estate can be in parts as well, physical real estate. So clearly there was this need for access to global markets. We needed to give the opportunity to alternate investments, things like CFDs, stock futures, cryptocurrency. All of these things have boomed over the last couple of years, and you'll find that things ebb and flow. And there's always more interest in certain commodities or equities, etc. And the best way that you can kind of get generational wealth or be true on your path to financial freedom is to have access to all of these markets. And that's why I think it's been vital over the last 2 or 3 years that we've had this conversation with countries like Kenya to give them the opportunity away from their traditional investments.
Because the currency risk is huge for these investors.
Huge.
Invested locally.
Exactly.
Really inhibit their wealth.
Absolutely huge. I'm seeing this in Nigeria, of course. I'm seeing it in Kenya now. We've got to give opportunity to people, global opportunity.
Okay, great. And Brian, we've got a question from Alexandria in the chat. Thank you, Alexandria, for the question. Just asking more about investing in currency. You touched on it in your introduction. Making bets, if you like, or having views on currency is fraught with difficulty. But how do you help private clients perhaps make sure that they're protecting their downside, they're sensibly set up, they're able to access the currencies they want and express views that they have about global markets? So
what we're seeing in volume terms is that Kenyans currently, as I said, we have hundreds of thousands of clients. The predominant products that they like to trade is gold. Kenyans are loving to trade gold now, XAU USD, the gold against the dollar, and currencies like euro dollar and cable, sterling dollar. The reason why people like to trade these things is we keep on touching on this very important point, the liquidity thing, right? The liquidity is the big issue that you have with lots of investments that you don't have in the FX market. The FX market, circa $6 trillion of volume goes through the FX markets daily. It's the most liquid market in the world, and I think Kenyans have kind of woken up to just the lack of trading volume that goes through a lot of the local stocks. As we've touched on, the liquidity issue of when you're trying to sell real estate. And so they're coming in their tens of thousands, monthly to come and pick up these products, and it's an incredibly exciting time because when you're looking at inflation, when you're looking at the times that we're in. So if you're looking at a time where there's been war declared, where there's supply and demand issues around oil, where you're looking at a safe haven in gold, where you're looking at currency fluctuations, particularly you can see what's happening with the dollar at the minute. People want products that enable them to take the advantage of that, going long or short. So this is the key thing when you're looking at an alternative investment, when you're looking at something like a contract for difference, which is a contract which kind of mirrors the underlying price. It gives you the ability to make money in a down market or an up market. Do you think dollar's going to keep increasing? Do you think that whatever's happening to arguably the ruble, where people would look at that during the crisis? Do you think that gold is a safe haven at $2,000, or is it fair value at $1,733 where it is now? Oil at $100, a supply constraint's going to make it go up from $100, or is it going to come off? You need the ability to have a product in your artillery. If you're looking at a percentage of your portfolio to be speculative, you want to be able to either hedge and protect your current investments in any environment, up or down. And what we do at FX Peso is give the ability and people the ability to trade in long or short. Okay, thank you. I hope, Alexandra, that got to your question. We also have another question now in the chat from, I can just see First Finance, but Brian, it's a natural addition to that, which is to say, what are your views around cryptocurrency, the regulatory environment, investing in cryptocurrency? If people are looking at, as you say, like a basket of global traditional fiat currencies, how does crypto fit into that for you? Crypto's on the lips of most people in Kenya at the minute. It has been for a long time. There's some crypto exchanges that are I think the second or third most downloaded app at the minute is Binance, and it's because people are very, very interested in it, and it's quite easy for people to understand and to understand that there's big returns from what they hear from people online. I think my view on this is that it should be regulated, particularly the speculative side of cryptocurrencies, because many people that do invest in this have no idea what they're investing in. They say these words like NFTs, blockchain. They talk about the next altcoin that's come in, and they don't really understand what they're investing in. And in those situations, for client protection, unfortunately, sometimes the regulators look like it's protecting people from themselves. It should be regulated. Now, we know that the local regulators in Kenya, as an example, have an appetite to regulate spot crypto. CFDs is different. CFDs is people can trade CFDs, but with spot crypto, which they've got an issue with the transference of things like Bitcoin. They have an issue with not being able to understand how to tax it. They have an issue to understand that where is this Bitcoin going? How are these outflows from the country? And that situation, you have to look at regulating it. And we've heard recently that the CMA in Kenya, for example, are looking at regulations in their sandbox. This is a very, very recent news that's come out within the last 7 days. So I think my view on regulation around cryptocurrencies is that many people that are involved in it want it to be decentralized. They like the idea of it being decentralized, but there has to be some kind of middle ground, because a lot of private investors have lost a lot of money on NFTs and cryptocurrencies over the last 6 months, a lot of money. So there needs to be a balance there.
Thanks. And Brian, do you think that using a traditional asset allocation model is useful for private clients looking at this, i.e. carving up their overall balance sheet and looking at a portion of equities, bonds, real estate, other alternatives, cash, and looking at it in the round depending on their stage and financial position? Or how do you talk to clients about that kind of view where they're looking at their overall risks?
Yeah, no, exactly that. I think you can't give a template. I think everyone has their own personal template depending on your risk tolerance and where you are at the stage of your life. For example, I was a lot more speculative in my 20s and 30s than I am now. And no doubt I'll be moving much more into kind of dividend paying, kind of fixed income on top of my ETFs and stuff like that in my later life. We speak to people about that. I think everyone's been very carried away with alternate investments over the last 3 years because of the prevalence of things like cryptocurrencies and people talking around 20,000% returns, 1,000% returns in a week. And we've had this big unfortunate kind of influence coming in with people on social media, on Reddit, YouTube, laying over their Ferraris and throwing money in the air and saying that these returns come in. And unfortunately, it felt like gone were the days of the kind of the Warren Buffett teaching of patience and investing for the long term, and too much. If you look at a pie chart of where you'd want to allocate your funds, far too much of that became in the speculative space, very short-term speculative space, and the mass majority of that, I would argue, when I speak to private clients, and I've done multiple times, and I've asked them why they invested in certain things, the majority of the time the answer is kind of FOMO, fear of missing out. Someone's telling them that they're doing it and they're making a lot of money. We have to get back to the time, in my opinion. We talk a lot about this at Equiti, at FX Pesa, where you're meant to be saving, you're meant to be learning, then invest, and then be patient. Start looking at that pie chart, put more of that in for the long term, put more of that towards actually understanding what you want to do with FX, understanding what you want to do with long-term plays, like holding stocks long-term, but speculating on them on the short term as well. And we teach through all of these things. I think we try and look at it like adding strings to the bow rather than having one size fits for all. That doesn't work. You've got to train people up and let them have their own personal portfolio.
Okay, great. There's a quick comment from Sharon and the chat for you, Brian, just about views on NFTs. So, I mean, building on what you're saying, people can only allocate investment to speculative things like that 5% of overall, just as an outside bet around things that might have value over time. It's hard to appraise.
Yeah, it is. But most if you actually understand NFTs and you actually understand the utility to them, and you genuinely are putting a speculative, the amount of your portfolio that you speculate with, if you genuinely are doing that, more power to you. I've got no advice on what to do because I personally stay away from it. I think there's a good meme going around at the minute of what is it? The person that bought the first tweet from Jack Dorsey, the Twitter founder, for 29 million. They said he's going to sell it for he's made an almost $20 million loss. So we know that there's big amounts of money that have been lost on NFTs recently. The ones that have utility and you want to invest in it, but by all means, but I would always say truly understand what you're doing. Do not invest in anything like an NFT or the latest crypto coin if you have absolutely no idea what it is and you're only doing it to speculate off the back of someone else telling you to do so. It's normally the greater fool theory, right? Someone is normally trying to get you to purchase it at a price higher than they have. So my recommendation is to really read into things like that before you do it.
Thank you. And Brian, on the poll, after real estate, private equity and hedge funds, as you'd expect, were right up there in terms of what people considered as attractive alternative investments. One of the challenges is how private clients can actually access not just any fund, but good quality funds that are going to deliver returns, do what they say on the tin. Through your platform, how do you help investors in East Africa access funds that are going to, preserve wealth and enhance it?
Yeah. It's a good question, because it's something else that comes up too frequently as well. It's that people that I've seen in Africa compared to other jurisdictions that I've worked in want to give other people their money. They want to give other people their money and work for them. And one of the things that we've been desperate to try and do, we're on a mission at FX Pesa to educate 1 million Kenyans by the end of next year. We're well on our way to doing that, and this is relentlessly through workshops, seminars, podcasts, radio, like just so much stuff that we're working on. And we've got 6 different offices all over Kenya as well. And the reason we do this is we're trying to give everyone the tools to make these decisions for themselves. When it's good that if they want to put their money into something else without making their own decisions, I would say that funds, and you can buy ETF, CFD funds on our platform. I thought that when personally, in my opinion, one of the biggest steps forward in investment ever was when Jack Bogle first helped create ETFs, exchange traded funds. The mass majority of my investment is held within an S&P ETF. I know that I'm, annualized over the last 10 years, you get a 14% return on that. Now, some people, as I said, as you get older, you're very, very, very happy with that return. I think a lot of people that are in their younger years are looking for potentially more speculative funds. They want something that's going to give them a higher return. But I love the idea, and I've seen over time the power of compounding interest on things like ETFs. I purchase ETFs for my children since I've got 3 children. I've been purchasing them since they've been 0 in a tax efficient way.
And costs are just very low in the ETF, isn't it?
So low. Yeah. So low when you've got tax efficiency as well. You're not paying tax on it. It is, in my humble opinion, it's one of the best things you can ever have for generational wealth. My children, the power of compound interest is something that we should always discuss in these kind of conversations around wealth. I've noticed that particularly in schools in Kenya, we did a virtual roadshow of all the universities as well, spoke at Strathmore and University of Nairobi, etc. These conversations were not had. People weren't talking about alternative investments. They weren't talking about compound interest. They weren't talking about savings and investing early for later on in your life. It's very, very hard for people to do that. Of course, we know that 70% of Kenyans enter their retirement with less than $1 million shillings. So we know that they have to do it. It's hard to do it, but it's the only thing you can do to get out of that when you go into retirement. So funds, for me, if you go into a low-cost fund, by all means do so. Have global access to make sure that you're accessing funds outside of Kenya, because I think they're more stable and better returns in the long term. And try your hardest to learn as much as possible for yourself rather than giving money to funds, in my opinion. Great.
We're coming into the last 15 minutes of the conversation, so do put a question in the chat and I will bring it on to our speakers. One of the aspects that you both mentioned up to now is about platforms. You obviously both have platforms that allow access to investors. Brian, you also mentioned Kenyans being glued to their phones. The technology now is unlocking huge opportunity, isn't it, in personal financial planning that generation ago simply wasn't there. It would be face-to-face through a broker, paperwork,
exactly,
and a very arcane way of doing business. Do you think that these platforms with suitable financial products can really open up investment markets right down to retail investors looking for some savings to protect their future?
Definitely. I mean, VC inflows, what are venture capitalists normally looking to invest in? They're looking to invest in people. There's a problem that needs to be solved. And one of the biggest problems that has happened historically to this point, particularly across Africa, has been lower financial literacy rates, access to global markets, as we keep on mentioning. And now what we've seen is everything's kind of come together in a perfect storm to fix that. So we saw coronavirus kind of hypered the adoption of technology. People had to work from home. People had to find a second income or a first income, a side hustle. People were looking at their finances. We've seen that a lot of people, companies, payment companies across Africa have really had a lot of serious investment into those companies as well to fix that problem. More mobile phones have gone into their hands, as I mentioned earlier on, 690 million mobile phones in the hands of sub-Saharan Africans by 2025. So the perfect storm is there of, you've got the want there, you've got the money inflow coming into fintech, particularly as an industry, you've got mobile phone penetration, smartphone access, and you've got people that are needed to find these incomes online as well because of coronavirus. When you add all of those together, you've seen how much the adoptions come and how many people now are coming into looking at the finances for the first time.
Another question from Sharon, just asking, on a macro level, does the crisis in Ukraine pose a threat of global recession? I think there's a lot of commentary and commentators pointing to the fact that there is likely to be. But more interestingly, what are your opinions with regards to the Kenyan economy in the global market? I mean, perhaps, Brian, you want to share some thoughts as to, if we are heading into a global recession, what's the impact on Kenyan investors?
Recessions normally come between kind of 9 and 12 years in any kind of cycle. We've just had the longest bull run in history and the most aggressive bull run in history. So when you look at it from a stock market point of view, a recession is long overdue. And at that point in time, as investors, you start looking at these things for opportunities. Recessions bring serious opportunities along, and thankfully, when you look at it from a macro point of view, these recessions on average last about 12 months, 12 to 24 months, 24 months being the particularly severe ones. So when you look at it like that, and you've been through this a few times, which I'm sure at our ripe old age, you look a lot younger than me, David, but you know, when you've been through it a few times, you know that these are the opportunities that will present themselves in these periods of time. So embrace it. We talk people that you can't do anything to change it. In my opinion, yes, there is a heightened risk to global recession. It will impact lives for sure. We will get out on the other side of it. We always do. Last year alone, there was 70 all-time highs in the S&P. So you come from a low, and then every single time there's an all-time high, an all-time high, an all-time high. It will come back. It will definitely come back. What you do during the recession can actually set you up for later life. So when we look at it from a Kenyan economy perspective, you see, like, for example, we have elections in August in Kenya. For 3 years, people have been telling me that, you know, how much the elections can impact business. People shut up shop. People don't want to do business. Well, in that situation, you have to think global. So even in a recession, whether you're in the Kenyan economy or a recession, or wherever you are, if you think global, there's always opportunities. Is those opportunities going to be in commodities? Do you think that oil is going to increase during a recession? Do you think gold will increase during a recession? Do you have the opportunity to trade that long or short? Would you rather go short stocks in a recession? You think that stocks are going to collapse? You can short those as well. You can hold long positions in stocks. Stock futures. All of these things, if you have those strings to your bow, in a recession, if you're in a Kenyan economy, you can't let an election impact you. You can go to the US, you can go to the UK, you can go to gold, you can go to a global market. Nothing can get in your way if you actually understand what you're doing. And in these situations, you see it as an opportunity.
You can express a view through various instruments in any market.
Exactly right.
Yeah, interesting. We're coming back into the final few minutes of our discussion before I hand back over to Anne. Just coming to the final, there was a poll question where we were just trying to get a sense of how the audience makes financial decisions. 40% saying relying on a financial advisor, 60% on a combination of friends and family or their own analysis. I mean, Brian, you talked about your project on financial education. Do you act as financial advisor on the ground, or do you work with local financial advisors? How do you help clients navigate these complex matters?
We educate them direct. We educate the people direct. So, yeah, I mean, a big eye-opening kind of eureka moment for me when I was a lot younger was, you know, I had a pension fund, a mutual fund. I had a bank, and I realized I was giving the bank all of my hard-earned cash. They were going off and buying instruments that I could readily buy for myself. They were taking the 14% and giving me back the, you know, in the UK at the minute, I think the interest rate on your current account was 0.1% for the longest time. And then also the pension funds. I could easily take the money from my pension myself, put it into its own vehicle and invest into an ETF, again, getting me 12% back, and they were giving me back 1.5%. So when you realize that these institutions are developed to take your money, make money from it, and give you a small part of that back, you start to realize that you want to do this for yourself. And the more you rely on other people, the more they're going to have their slice of the cake. You don't want that, right? You want all the cake for yourself.
Absolutely.